So I've been consistently telling people Bitcoin was a good idea since I bought it, and I started buying it in the mid-9000s. I've never told someone to sell it, and I never told them to trade it. You have to basically buy it and wait 10 years. So when I'm looking at Bitcoin, I'm not a trader. I shake my head. I feel sorry for them. It's like, give me an example of a billionaire that made $1 billion shorting Apple, Amazon, Facebook, or Google stock with trading algorithms. Name one. You're going to short or trade Bitcoin. It's like shorting and trading Amazon.
Trading Bitcoin is widely recognized as a risky venture, and numerous experts, such as Michael Saylor, caution against it. Saylor, a prominent figure in the field, adamantly opposes Bitcoin trading and expresses empathy for those involved in it. In a recent interview, he stresses the importance of adopting a long-term investment approach with Bitcoin, likening trading Bitcoin to trading traditional stocks like Apple, Amazon, Facebook, or Google. He argues that such trading rarely results in significant wealth for most individuals, echoing the sentiment that applies to Bitcoin trading. Saylor emphasizes that achieving substantial wealth through shorting or trading tech giant stocks like Apple or Google is uncommon, a principle he extends to Bitcoin trading. He contends that the majority of traders fail to become billionaires or even millionaires through such methods. In essence, he suggests that the odds of success in Bitcoin trading are comparable to those in trading traditional stocks. In the interview's conclusion, Saylor offers insights into what many overlook about Bitcoin, inviting viewers to stay engaged until the end for a deeper understanding of the cryptocurrency's intricacies. His perspective underscores the importance of informed decision-making and a long-term perspective when navigating the volatile world of Bitcoin trading. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I'd like to invest in things that I can hold a decade. I wouldn't be holding AMC stock or GameStop stock for a decade. You know, you could have made money on Carnival Cruise Lines and the airline trade, but I just wouldn't do it because I want to buy something and hold it for a decade. But generally, what's the one mistake? Unless you were going to buy gold or long-dated sovereign debt with the money that you borrowed, the one mistake would be not to have borrowed the money. You almost couldn't lose money investing in anything. How do you lose money? You trade it, right? You basically buy GameStop, you short GameStop on margin, or you do some kind of short-dated trade. And I've lost money on short trades. Here's what I think about that. No one in the world is so smart they can guarantee your short-term trade is going to work. And any trade, no matter how intelligent it is, can be made to look scary if I compress the time frame enough. If I zoom in on your face with a 10,000 to 1 magnifying glass, I'll find a blemish. And if I track the most stable thing down to the 1 second gyration, I will find anxiety. One point I made to people is, if you took $1 million and you bought a house, and then you went to everybody you could find in the world every minute of the day on Saturday night while you're drinking tequila, and you said, will you buy my house for me for more than I paid for it? You would probably find someone that would say no. You would probably find someone that'll say, I don't want your house, I'm not going to pay you anything for it. Or someone else would say, I'll give you half. And if you then said to yourself, oh my God, I lost half my money, I found someone that was willing to give me half, you would just give yourself a heart attack. If you keep oversampling, if you sample everybody all the time, you're going to create anxiety. And the problem with Bitcoin and cryptos in general is they're sampling everywhere in the world all the time. And so if you fixate on it, it's going to give you anxiety. And the only thing you can do is buy or sell, right? And so if you buy and hold, that's good. And at any point in the history of technology, if you had sold, you made a mistake. With the one caveat, you have to buy the winner. You have to buy the category killer. You buy Facebook, Google, Amazon, Apple, Microsoft. And so the question is, how long do you got to watch them win before you decide they're the winner? I think 30 years is a bit late. If you got to wait for 30 years before you pick the winner, right, you probably won't get outsized returns. But you could have watched them win for 10 years and bought them and still made a lot of money. The Chinese don't want capital to flow out of their country. They've got a closed economic system. And the Chinese don't want you to move capital, and Bitcoin just happens to have gotten to the point where it's material material. It was immaterial. I mean, they'd already, they shut down conversion of fiat CNY currency to Bitcoin in 2017, right? It happened in 2017. The country gave people some number of months to move their exchanges out. There's OKCoin and there's OKEX, right? And they split, because you couldn't be trading fiat to Bitcoin in China. They forced themselves out of the business. So that's why it's a geopolitical mistake. It's a tragedy for the people in China that own Bitcoin. I feel awful for that. Who are the big winners? Look, my company buys Bitcoin at $35,000. I would have paid $70,000, Scott. If this had not happened, then Bitcoin would have gone 60 to 70 to 90 to 100. We'd be paying $100,000. So people buying Bitcoin in the 30s got Bitcoin at a discount. You got two types of people. You got the long-term people that said, but for the Chinese exodus, we would have had to overpay. And you got the short-term people that said, you're so stupid. You bought it at $50,000 and now it's $35,000. You should have shorted it. Well, shorting is like shorting electricity. It's like, no, I don't think so. This is a Rorschach test. If you understand that Bitcoin is digital property rights for 8 billion people going to change the earth, then you think this is just volatility and it's a buying opportunity and it's a windfall. And if you think Bitcoin is a random speculative gambling asset of no consequence with no underlying value, then you think, it's like you were stupid. You shouldn't have bought it. Obviously, the technologists that understand it, we think it's a decentralized, sound digital property network that can serve as the basis of the 21st century economy. This is $1 trillion mistake for China because they had 60% of Bitcoin mining. It was worth $12 billion a year plus all the Bitcoin, and it was doubling every year, and it was going to $100 trillion. And they could have had trillions and trillions of dollars. And instead, they held a gun to the head of their holders. Now, the next question is, well, is Bitcoin good for the world? Well, it's good for the rest of the world, right? It's good for the dollar. What you can see here is that if you're free-floating currency, then you're going to see the US dollar float to 5 billion people's mobile devices, and Bitcoin is going to be the underlying protocol to synchronize all 5 billion devices. And if you don't synchronize on Bitcoin as a settlement network, you'll synchronize on Lightning as a transaction network, or you'll synchronize on another layer 2, a proprietary layer 2 controlled by Binance or Coinbase or Square or PayPal or Apple or Google or Facebook, that then in turn settles on the underlying Bitcoin settlement network. And so the architecture of the world is becoming clear. When I wrote the book, The Mobile Wave, what I said was, buy Apple, Amazon, Facebook, and Google because they're the dominant digital networks in the Western world. China closed off China to Google and Facebook and Twitter and Amazon and the like through capital controls and information controls. And then they created their own version, Alibaba, WeChat, right? Alipay, right? So Weibo. So China created its own little world. And what you saw was the Westernet, which consists of Western Europe, the United States, the rest of the world. That became one ecosystem. China, with their billion people, became the other ecosystem. And then you saw the category champions in both ecosystems. But ultimately, I would rather own Google than own the equivalent in China, especially because at least Google gives you right to property, which you can take to Sicily or Paris or London, and you can live in a free economy. Whereas if you've got all your wealth and your business trapped in China, it's a closed system, and you have to stay within China. You don't have access to the rest of the world with it. You can't take your capital. And so ultimately, they close themselves off, which, it works in the near term, but on the long term, you got to bet against Google. I'm not. I really think the best way to understand Bitcoin is digital property for 8 billion people, and it's going to demonetize other forms of property in the same way that digital books sucked the information out of libraries and actual books and universities, and the same way that digital music sucked the music out of your CDs and your records and your phonograph and your piano and the orchestra. It's a simple collapsing of the economy from a high energy state where it's very energy intensive and mass intensive and difficult to provide this thing to 8 billion people, to a low energy state. And when anything crystallizes, lots of energy gets given off, just like the energy when you go from steam to water to ice. The energy that's collapsing because we're demonetizing gold. It's hard to move $1 billion of gold. It's 30,000 pounds. It's hard. It takes you $5 million to move it from place A to place B. It takes $5 to move Bitcoin from place A to place B. As you demonetize property and dematerialize all of these things in the economy that we live in the 20th century, you're creating extreme value. The value is going to accrue both to the underlying asset and it's going to accrue to all the applications that adopt the asset. MicroStrategy adopted Bitcoin for a treasury. Square adopted Bitcoin. Binance and Coinbase adopted Bitcoin. Every place that this digital property is plugged into is going to benefit, and then owning the property is the benefit. So once you understand that, you understand it's going to be a process that runs 10, 20, 30 years. I mean, the next decade is going to be big. The last decade was clearly big. You just got to look at it as a technology trend, and then obviously invest money that you can hold for the long term. I mean, not money that you need to have next Thursday because you'll get wrecked or wiped out on leverage. And if you don't understand what I said, go to hope.com. There's a free course on Bitcoin for everybody. There's another set of lectures by Gary Gensler at MIT. There's another course. There's 10 hours of discussions that I've got with Robert Breedlove on energy systems and engineering. There's every book on Bitcoin. There are all the influencers and a ton of leaders on Bitcoin. There's podcasts on Bitcoin. There's tons of video on Bitcoin. Study it until you've concluded that you hate the idea or you like the idea. Because if you're not sure and you're living in fear and anxiety, it's pretty stupid to risk your life savings after 2 hours of study. It took you a lifetime to get the money. So it's funny that people will work a lifetime and they'll make investments in 1 hour. How about you worked a lifetime, spend 100 hours or 200 hours or 500 hours. After you've spent 500 hours thinking about it, maybe then, you make long-term decisions and you'll feel good about it. You'll know why you did it.
Michael Saylor shares valuable insights on Bitcoin trading versus holding for the long term. He advocates for the latter, emphasizing that investing in assets like Bitcoin over extended periods yields significant returns. Saylor believes that despite short-term volatility, assets like Bitcoin are poised for exponential growth in the long run. Contrarily, he warns against the risks of short-term trading, highlighting the potential for substantial losses when attempting to outsmart the market. Moreover, Saylor underscores the importance of identifying promising assets early on. Drawing parallels to established giants like Apple, Amazon, Facebook, and Google, he illustrates the significance of recognizing potential winners for successful investments. While Bitcoin is already showing signs of growth, Saylor and other experts suggest that there remains ample time to invest before its value potentially skyrockets. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.